Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So in the last week we have really miserable collapse on the market, and in general, we said that actually two way of the behavior is possible on gold. If market will start coiling around the previous top, it will mean that it's ready for upward continuation. If it will break some important intraday levels, it would suggest further downward continuation. And as we said in the beginning of the last week, if you remember, we even have got the setups for taking the long position, but all of them has led to just minor pullbacks, so approximately 25, 30 bucks per contract. So this was not really very strong pullbacks from the significant levels. And later, market has shown the behavior, if you remember, right around the support that was around this level. So market has failed to form the reverse head and shoulders and actually starts dropping, which was the final confirmation that gold market is turning to the drop. As a result, you can see this drop was really significant, and of course we haven't expected that it will be so deep and strong right in a single week. As you know, this drop has become the greatest in a weekly drop since the 1987. So this was really outstanding collapse in the gold market. And take a look, market even hasn't given the chance to our head and shoulders pattern, which was really ultimate bearish pattern that could be formed in last week. So if you remember, we talked about this possible left shoulder, head, right shoulder, but take a look, market has dropped significantly, and even neckline that was turning here was broken. I even wouldn't talk on the oversold levels, as on the weekly, as on the daily. So market oversold in all time frames, except maybe monthly. Why so curious behavior we see on the gold market? On the first glance, it should be rally because we have the virus epidemic and total collapse on other currencies across the board. So the only safe haven that we have is the gold, but gold is dropping. Well, this is temporal effect, and it's will not last too long, I suppose, because currently, while gold is dropping, because this traders close the levered positions to avoid the margin calls on the different levered positions that they have on different markets, and they close the assets to cover the margin, and that leads to this sell-off leads to the drop of the asset price. But this will not last too long, because we suggest that in the current situation, gold will become the leader of the value in the nearest time. So when the technical process will be over, with the cash flows, with the flows between the different markets and technical response on running into cash process, so that will last for maybe a few weeks or more, but they should finish soon. It's housing really soon, I suppose. And after that, markets and investors start to interest in where this cash to put into. And I think that the gold will become the leader, because as you see, interest rates are dropping, assets value are dropping, and that makes no difference, in fact, whether you're keeping the asset that generate the interest, bond, or you will keep the gold that generates no interest. So the interest rates are so low that makes really absolutely no difference. And gold has intrinsic value, while the bonds without the generating an interest, they has really no value. Well, that makes gold relatively more attractive in the current conditions, because the balance has changed. Drop now stands, the rate stands very low. But first, as we have the strong momentum, and technically this momentum shows the market reaction on the monthly major targets of, actually here market has hit the XOB on the monthly chart. That's also yearly pivot resistance one. And here we see reaction. First, when the market still stands with this run into cash process, we will try to use this momentum. So on the daily chart, as market strongly oversold, this is definitely not the point for taking the new short position. We need to see the healthy pullback for taking this position. And the first level that we'll keep an eye on is the 1580. I'm not sure that we'll get the drop right with 1630 because it seems too high. It's 100 bucks per contract. It's a really significant level. But 1580 easily could be reached. So in fact here, guys, we also have the weekly bullish stretch pattern. So if you'll take a look at the weekly chart, you will see that the market stands at the confidence support in the weekly and weekly oversold. So that should prevent us from taking the short position immediately. We need the pullback. Well, whether the trade gold market right now on the long side, it's different story, and the choice will stand up to you. But currently, as you will see on the follow time frame chart, we do not have any clear bullish reversal pattern. One thing that we could suggest is you can see that as this low stands at XA extensions 11618, so it's typical for the hand and shoulders. But, well, guys, I'm not sure that the hand and shoulders will be formed here. Maybe godless triple to sell will be formed or something else. In this case, we could keep an eye on the possible taking the position. But currently, we do not have any clear bullish setup except weekly stretch pattern. But on the intraday charts, we do not see any confirmation of the reversal. So in current circumstances, it would be better to see and get them before taking any long position if you would like to. Conservative approach suggests ignoring any bullish signs here and just sitting on the hand and waiting for a healthy pullback, trying to then take the position and take the part in the downward continuation due to this momentum. So because by our view, market could drop to 40 and 40 area. This could be a response to monthly targets, potentially. So that's our current position on the gold market. Now we are watching for a pullback. Theoretically, you could try to take a long position here with this writing to get this pullback, but it would be better to get some bullish patterns. This is separate, isolated trading setup for us. This major thing is the pullback itself. That's why we are following the conservative approach. We're just waiting for a pullback, and we'll consider taking the short position to join the momentum of this recent drop and to take the position for reaching of the lowest standing support areas.